Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Tuesday morning pre-market webcast. Okay, daily chart, and I didn't change a single label on the chart because we're still battling over the daily mid-band. You can see that resistance tonight comes right into the green line there. That's the daily mid-band, the 20-day simple moving average. The bears are trying to push that down. We traded into the 33s last night. They walked it up to 52 basically during the debate. 52.70 is the weekly pivot. It's stalled there, printed as high as 53, 54. The area of R1 is 53.92, and it traded down from there back down to 41. So basically 13 handles down. We walked it up into the 46 area, and we're battling over that now. The bears have an advantage here. We spent the entire day yesterday below the daily middle band, at least the regular session, and we spent the entire regular session below the weekly pivot early in the week. The bulls have tried to take it back. Doesn't mean they can't take it back later on today, but they tried to take it back in the overnight, and the bears defended the area that they needed to defend. This is why the weekly pivot matters, and it matters a great deal early in the week. The winner of the weekly pivot early in the week generally gets the spoils in the latter part of the week. And if you keep that in mind, vastly more often than not, you'll know what the right side of the tape is, at least at that moment in time. And that'll, at a minimum, it'll keep you out of trouble. And if you do it correctly and you watch risk and you do what we do in the room, then you can do very well. So the weekly pivot is still up for grabs, but the bears, really all they need to do now is just maintain another day or so below 52, and they can go ahead and make a run at the 100-day exponential moving average, which is the yellow line there, down in the 25 area. Absolutely doable if they're able to seal weekly pivot as resistance. So let's take a look at the hourly chart. So we talked about this yesterday. They were trying to find support at 44. Here and here. Didn't pan out. And we spent most of the day, well, first of all, being unable to take back, the bulls are being unable to take back your weekly pivot, trading lower. They retested the FOMC low. Here's your FOMC reaction low. The reaction low was 32.5. Last night we traded down to 33.25. So, within a handle or so. Bulls battle back, weekly pivot holds. Here we are, they're trying to retrace it back. Now, if today trades similar to yesterday, you're just going to see this series of, bear flags up and down, up, down, up, down, up, down, stairs down. Can the bulls make a run up over the top here? Sure. The issue is when you get here, you've got to break through. So if this is a higher low, here to here, then weekly pivot would need to convert. They need to do it early in the day and dispel any doubt that that they're in control. If they do that, then the bears tend to fall in line. So they have an opportunity here if they can continue to head higher. But they can't screw around. They've got to take this entire area out and start working on the monthly pivot up in the 67s. All right. Everybody have a fantastic day. Follow us at Twitter at Princeton Trader. Come check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.